So you guys recently sent us a news release talking about a first of its kind regulation. But if we can just kind of take a step back right now before we get into some of the hype of it, let's just kind of talk about what exactly is going on.
Yeah, that's a great question. So we've met with thousands of Californians over the past several years who are really struggling to find insurance, especially if they live in areas that have seen or experienced devastating wildfires or even at risk of wildfires. And that includes parts of the Sacramento area, the foothills, but also down into Southern California, the areas that we just saw affected by the devastating mountain fire. So what we're doing is a comprehensive reform to 30-year-old insurance rules that really haven't stood the test of time, that aren't helping Californians get the coverage they need. And at the end of this process, when we complete our work this year, Californians are going to have more options for insurance. Insurance companies are going to come back into the parts of the state that they've really stepped back from, and that includes what we call the wildfire distressed areas. Those are parts of the state where many people can't get insurance companies even to call them back, much less write them a policy, and that needs to change, and that's what this is part of.
Can we also talk about what exactly this regulation is supposed to do?
Definitely, definitely. Um, so, I talked about 30-year-old rules, right? So under California's current rules, insurance companies can choose where they write, and they can choose what price to charge. California is the only state that requires insurance companies to actually look back and use historic data when they're pricing their insurance rates. And what that means is that after major wildfires, we've seen premium spikes, we've seen price increases almost jumping overnight, prices in some cases doubling. Commissioner Lada's regulation allows insurance companies to use forward-looking models that look at the impact of home hardening, of fuel breaks being done by communities, the billions of dollars that are being spent now to safeguard Californians, not just looking back at the past, at the devastating fires that we've seen. And what that's going to do is over time, it's going to lead to rates becoming more stable and not seeing the kinds of increases that we've been seeing in recent years. And to do this, insurance companies have to agree for the first time to write more homes in wildfire distressed areas. And that's a game changer for our state. It's going to bring insurance companies back to writing in places where many today are not writing any policies.
So that's kind of the conundrum though, right? Because if they were able to write, if they were, if it was good for them to write those policies in the first place, they would already be doing it. With this kind of tool, what exactly is changing the equation here that's making it more likely for these insurance writers to go back in? But on top of that, how do we actually make sure that they keep that commitment as well?
That's a great question. As part of the agreement to allow insurance companies to use these forward-looking models, insurance companies have to commit. They have to commit in writing to write more policies. They have to show us where they're writing those policies, and we'll hold them accountable. And insurance companies don't meet the targets that they've set, we'll use the enforcement tools that are under existing law to hold them accountable. We can, if they're not meeting their obligations, we can reverse that rate that they've charged. We can hold a rate hearing. There are a number of tools that we can use to investigate and to hold them accountable. And that's really the core of this. Right now, today, there is no requirement that insurance companies write policies in areas of higher risk. Starting January 2025, that changes.
On that date, and kind of when you refer to that date and things changing,
Sure.
for your role, is this the end of the line for where you guys are involved, or is it kind of the middle period? What kind of point is this?
That's a really good question. You know, how do I put this, right? The Department of Insurance is on track and we're on target to get all of these regulations in place by the end of the year, by December 2025. And that means starting in January, insurance companies, it's your turn. We need you to come to the table. We need to see your data. We need to see your rate filings. We need to see, where are you going to be writing these policies that Californians need? We've issued a map. We've issued a list of counties and zip codes around the state. You can go to insurance.ca.gov to see those. Those are the areas where the FAIR Plan has become a bigger part of California's market and needs to go down. And I mean, many people don't know what the FAIR Plan is, right? But it's California's insurer of last resort. It'll write you a policy if nobody else will, but a growing FAIR Plan is a problem. So, that's the first thing. We have that map, Californians have that map, and the insurance companies have that map to see this is where you need to be writing policies. And you need to grow those policies, and you need to grow in, and take people out of the FAIR Plan. So that's really driven, this is the end of the beginning. And the next step is for the insurance companies to step to the table to take on these policies, to write these homes again. And that's what we really, are going to be monitoring as we move into the new year.
And I got to speak, I'm not someone who lives in a wildfire prone zone.
Yeah.
But speaking on behalf of those people, I would think insurers don't necessarily have the greatest reputation in terms of like social circles, but I'm certain a lot of those people would not think highly of giving the insurance companies more tools to look at them more closely, potentially raise their rates. That's what I would be worried about if I were living in one of those wildfire prone communities. In that
Right.
respect, if I'm one of those people, is this going to raise my rates? I'm kind of scared about that.
Yeah. When we talk with folks, in the foothills, we were in Paradise yesterday talking to people. There's a lot of fear about what's going to happen in the future with insurance, but there's also a tremendous amount of work going on to protect communities, to make sure that homes are hardened, to clear space, all of that work. For the first time, insurance companies are going to have to take that into account when they're setting your rates. That's a game changer. That's what is going to change. And insurance companies are going to look at those homes that have been hardened. They're going to write policies for those homes, because that's what isn't happening right now. People are doing and spending money to make their homes safer, in some cases thousands of dollars, and insurance companies are still not writing them policies. That's unacceptable. That's what needs to change. And that's the heart of the sustainable insurance strategy. That's the agreement that we've reached with the companies, that they're going to write these policies and we're going to monitor them and hold them accountable. And that's really again, we need to get more companies writing more policies all across our state, not just the big companies, but the medium companies, even the small companies. Every company can do its part to take on some of these policies, and that's going to solve the problem.
And one last question for you. We're in the tunnel right now. I assume this is kind of like we see the light at the end, but given the crisis and how much people are paying for insurance right now, just with this new regulation, with some of the things that are going to be going on, how long till we reach it?
Yeah. So we're on target to complete our work this year. It's up to insurance companies starting in January to come to the table. And we think we're going to start seeing major changes in the market next year. By mid next year, we expect to have a lot more companies coming in, answering your calls for folks who are in parts of the state where that just hasn't been the reality. We think we're going to start seeing that change starting in mid next year.
All right, Michael, that pretty much wraps up all my questions, but just in case there was anything I didn't mention that you still feel is important to mention, anything that you didn't get a chance to talk about, feel free to say it if you have it.
No, I think, one thing I would say, just when people have any questions about their insurance, we urge them, come to insurance.ca.gov or call us, 800-927-4357. If there's a way to include that, that's always, we get all kinds of questions, from how do I find insurance to I'm having problems with a claim, and that's what our folks are there to really do, to help with. So, we don't stop doing the day in and day out work of just making sure, insurance companies pay these claims fairly, and, we get people the coverage they need. So yeah, if there's any way to include that, I always ask that.